Welcome, Ji. Let us discuss. I'm going to discuss one very basic principle, or you can say a basic pointer as an investor we have to consider while investing or while holding the stocks or selling, purchasing the stocks. So, as a this is very basic fundamental pointers, a sign which each investors should have keep in the mind. So, what those pointers or signs have, we are going to discuss. So, I'm majorly discussing five sign pointers, five signs that the stocks you are buying are hold. Okay, so we have to put those pointers as signs. Okay, these five signs that the stock we are buying are hold. Okay, you are going to invest or you are already invested and you are holding. We have to uh, uh, keep in the mind of these pointers. Okay, so what these key pointers have, the signs which are those. So the first things, no one likes the idea of losing the heart and money. Each one of us come in the stock market the main purpose of earn money, not lose money. So we know we are all are doing very hard work to earning monies, and earning monies are losing with some silly mistakes at the particular point. If we are not considering, that is the main purpose of these talks. So uh, simple things, we have a money, that money we are doing very hard work, and after that we are earning, and we are come in a stock market for earning money, not for losing money. So be conscious while investing or within investing. So the first things we have to note that we should be consider keen to have a growth. Okay. The question is, but the question is, how to do identify such names or pointer that have potential to destroy the wealth. Measure that if our wealth is increasing, if suddenly my wealth go destroy. Why? Because we are not knowing some key factors while holding the stocks or while investing. So, manager at DSP mutual funds have outlined these five simple signs that will help you to eliminate such bad apples. That are key factors for an investor to destroy or lose hard earned money. So I'm talking about the first things about the debt. If you are going to the planning to do investment, or you have already invested in the particular stocks, particular share, you have to check the debt ratio. Okay, what the debt ratio? How? What are the long-term borrowing? What are the short-term borrowing? What are the debt to equity ratio percentage? So we, as possible, we are trying to invest in those company which doesn't have a high debt ratio. Okay, simple uh, rule that there is an age old saying that you should not bite off more than what you can chew. Same, this is the art for the managing business as well as. Okay? If you are taking more and borrowing, that would be the cause of future problem. Okay, uh, buying a high level of debt to the fund acquisition or operational need is a sign of poor risk management. Okay, if the particular shares have a huge number of debt, that also indicate that the company are not making very aggressive risk management. This is a sign of poor risk management. Okay, in the last, if we're going to some examples, is that there are numerous examples in the recent past that went through the solvency and had to be solved off because it has become impossible for the companies to serve debt. Jet Airway, Future Group, Kingfisher, and lots of companies which have in the stock market have a huge debt. So be conscious about the debt. This is the first pointer. Okay, we have to be care about the debt. What are the total debt of this company? Always you conscious. If continuously year by year debt is going to increasing, you have to think. If company have a debt, but gradually they are paying out the debt and make some marginal debt to equity ratio, that is no, that is necessary for expansion of business, but one standard, one manageable level, not the higher. So I'm talking about the higher debt. If the particular shareholding maintaining for longer period, year on year, continuously basis on a higher debt ratio, then you have to think. This is the first and very critical point for any stocks. Second point, I'm talking about the volatility, expensive volatility. Stocks with unusual price swing are relatively riskier and harbinger for to other future trouble. It is a sign that there may be more than what meets the eye and can be avoided. One good way of measuring the volatility of a quote of a stock is the beta value. What is the beta value? Beta value is a numeric value that measure the fluctuation of stocks to change the overall stock market. A beta measure the responsiveness of stocks price to change in the overall stock market. And similarly, by going the beta quotient, there are some stocks, Indus Bank, you are going to India Bulls Housing, India Bulls Real Estate. These are the some of these names seeing volatile movement in the recent time and raising the red flag under this criteria. So, if you are noting beta quotient similarly like the beta quotient is a formula, is a financial matrix that measure how likely the price of a stocks or security will change in the rational to the moment of the current market price. So we have to also consider such types of stock which have a excessive volatility. Third point is about the profit. You are going to invest any stocks, you have to look that company are showing consistent profit or not. If if the longer periods of stocks showing negative profit in not quarterly but 1 year, 2 year, 3 consistent of multiple years, then this is also signs for be conscious. Okay? Companies that have a heavy investment in the asset giving low returns are reporting regular loss should be avoided. It could be due to the lack of pricing power, inability to pass on the cost of high input costs. Some of the sector that come in the mind about the airlines, telecom, steels. These are the sector, and in these sectors there are some company which financially weak company, and that are the very problematic signs. If you are talking about multiple telecom companies and airlines company, which I will discuss. So we have to also look the profit of the companies. They are growing, giving the positive profit in the consistent year. And next point, I am talking about the expensive. You know, each shares have a one about the P ratio. Okay, P ratio. So I'm talking about here unsustainable valuations erode future returns, and stocks trading at lofty valuations should be avoided. That means the particular trade is this particular A stocks, which actual intrinsic value of the, let's key 100 rupees, and they are trading there about you say 800 and higher P value. So you have to wait until the particular stocks not come under his intrinsic value or fair value. Always try to invest in any stock with his fair value, and such stocks which have very high expensive, that P ratio more than 100 or 200, they are, that means be cautious. In future price tend to be reversed. Plus valuation, most of the positive outlook is already priced in, and disappointment can lead to very sharp price rise. That means ki all the parts of this stocks have already covered, and stocks are trading very high valuation part. And after some time, that is sure the price of this stock going to the down. So be conscious while investing in any stocks or share. You have to check is the profit to P ratio, profit to earning ratio. As per the in the BSC 500 index, some of the most expensive stocks trading at the price P ratio of higher 250 to 6 include. There are some stocks named TC, NC Clothings, VIP Industries, Adani Green, Star, EHL, Lakshmi National Bombay, and multiple Ujjwal Financial Service and Quitas Holdings. So be conscious of stocks valuations. Always try to buy the investment on its right valuations fair value. Don't go invest in overvalued share. And apart from other these 5 points, we have to also consider some more key factors about the stocks. Okay, first we have to consider the cash flow, as well as they have a good free cash flow or not, and we have to also consider about the balance sheets, what number of values value assets, and one major point we have to consider about the promoter pledge. Generally, for raising a fund, our set of companies, what the promoter they did, promoter sells, pledge his shares for the raising a fund, and pledging percentage of any company promoter, not as per the market trend, they are not go beyond 20 to 25%, maximum 20 to 25%. If any stocks have a promoter place holding is more than 20 to 25%, be cautious. This is a sign of risk. Okay, and also sometimes we have to be clear about the mismanagement of the any balance sheet or any management comment content, any issue, any files going on, any comments given by some auditors or any agency risk rating agency given, then we have to management perspective we have to also take care. So these are the some points which I highlight here, that whenever you are going to uh, thinking about the investment, we have to take care is the about the debt ratio, about the high volatility, growth, what is the growth, and the profit as well as, and we have to sure make sense that we are taking buying on any stocks with a fair value, not go with a very expensive stocks. Also check about some cash flow and what kind of a company have a bank's balance and reserves and bank balance, and is there any mismanagement happen, and also key factor about the promoter pledge holding. So be if you are going to invest in any stocks, or if you are already holding, be check these pointers. This pointer help you to destroying your already wealth. So this is indicator of any stocks on a share. You have to check all your stocks. They have a manageable debt. They have a good reserve and bank balance. They have a manageable place promoter holding. Good, it would be the zero place promoter holding and place shares, and after that we have to check the profit growth, and you have to also consider about your valuation part. You are trying to buy any shares or stocks on a fair value, not you can purchase any overvalued share. And after some time, if you are trying, if let's key generally any share price follow some sine waves, follow some sine wave like this, this. So sometime if you are going to buy on a higher price, then stock should be gone come on the lower side as well as. So you try to buy any stocks and at a lower price and try to make profit on your upper sides. So don't be hurry if you're going to analyze any stocks, and if this stock what I'm going to buy. Before buying we have to check is the valuation at current price, this stock is trading is a fair value or not. If the particular trade is trading on a over price value, please hold, please wait. Stock market give you a chance, please wait and take some time, and when the stocks come under his fair value valuation part, then try to invest. Before investing, we have must check our debt, bank balance, promoter holding, profit and growth, and high volatility stocks. Thank you for watching this video.